know that the past few days we've kind of just been blitzing to the upside, making new like monthly highs every day, just pushing into the upper echelon of 380. But man, it is a tricky spot in the market right now, and especially with this earnings week, adding a layer of uncertainty, it just makes everything just so much more chaotic and whatever. So I wouldn't focus too much on if these companies had bad earnings or good earnings. Just focus on the price action and try to get a good understanding of the macro. Now, don't let the macro consume your ideology, but acknowledge it. Okay, wonderful. So let's go over to the chart. This is the 5-minute SPX chart. You can see that we actually opened up down here because of the bad earnings from the tech companies that we mentioned. Let's actually get a nice. There we go. Okay. We opened up. What did we open up down on the S&P?
I think it was like 0.6%, 0.9.
Yeah, point. Yeah.
Oh no,
Well,
points. Yeah, around there.
yeah, yeah. 0.6. Yep. So I mean, pretty bearish open, right? We opened up down roughly a half a percent, a little over half a percent, and then we actually pushed down to our low of day immediately from there, which led to a total of almost a percentage drawdown, 0.9% drawdown immediately in the first, right at the first 5 minutes of open. You're seeing almost a percent drawdown in the S&P from its close, and then obviously, the bulls were still present, as we saw, and we slingshotted right back up to our high of day, which, we're going to go into the macro in a sec, actually landed at a pretty specific spot, which is the point 0.5 retracement on the macro side, which we'll look at in just a moment. From there, man, I mean, we just essentially started to drop. I'm, again, I think that there were opportunities today to trade. I think that every single day this week, the intraday volatility, if you're really, good with these very strong candles and in pivots, then you can do well in this market, especially if you're scalping. But I am still drawn to the idea that we are in a bear market and we're pushing 385, 390, and I'm not necessarily looking to go long. I will happily sit this rally out, is essentially what I'm saying. And that comes from a personal standpoint, just the way I trade. If you don't want to sit this rally out, right, you could absolutely go long, and that's what people have been doing. Congratulations to you if you've been going long during this run up. It's been very profitable. But yeah, that doesn't take away from the broader picture. And this is what I mean, guys. We actually have hit our 0.5. I will highlight this yellow. We'll make it golden. Boom. Right? We tagged off of that pretty nicely. So, that's just something I would be keeping an eye on. I don't know, where wave 2 is going to end, but you can see why I'm being patient this week and a little bit of last week is because we're heading into these area where it can get a little questionable on the macro side. And I think once we get past earnings week, maybe things will get a little bit more clear. But, I mean, there's only so much to talk about when it comes to intraday price action. Like, yeah, we went up, we went down, and there's only so much to talk about on the macro side at this point. But I'd love to hear your thoughts, Logan. If whether you want to echo anything or have any
Yeah, yeah.
new thoughts and innovative
I
ideas
definitely
to bring
want
to the table.
I definitely want to echo your point regarding us being in a confusing point in the market right now, just because there is so many different Elliott wave counts that you and I are looking at. It really comes down to which one is correct at this point. Most of them are still yielding us with the same idea that that's going to be pushing us lower, but overall, it seems like we have found a immediate uptrend of some kind, and the question is, when is that really going to end? So I don't personally know. I have a profit target range around 391, 392 to about 394. That's kind of where my Fibonacci clusters line up in the lower time frames. But again, that's just one factor that we're kind of taking in, one variable. Again, I don't really know how long this correction is going to last, and we know that in bear markets, these short-term retracements like to be very powerful. So it obviously could take us up much higher than that. Perhaps even a retest of the 200 daily moving average around 410 is definitely in the cards, in my opinion. But you're right. On a day-to-day basis, it seems like we want to come lower, but we just keep on pushing higher. So unless you want to just solo in on the day and just trade just that day's price action, it is rather difficult to form a solid bias. So I think the best advice we could kind of give moving forward is either stick to your higher time frame bias or forget about all of it and just look at just that day's. But today, overall, like you said, I think there was definitely some opportunity. But like you also said, the market's not going to give you the best entry. We literally pivoted on a dime. We were going straight up, and then we went straight down. So
Yeah.
I'm not sure how tradable that is. I personally did not find any high-quality trading ideas today.
Yep. And I want to talk about what you said. Like, we've been just kind of repeatedly, like, fucking like crazy people saying that this market isn't going to give you good opportunities. And this is kind of what I mean, guys. It's like if we look at the past right here, right? Let's actually use our little polyline tool. All of the run-ups that we've had, on our downfall have been very aggressive, right? And I'm not, at some point the market will pivot and we will reverse and we will be macro bullish. But guys, I mean, like, you can see all the areas where we, pumped very hard right here, right? We're pumping right here pretty hard. But, look at this, right, Logan? I mean, what do you think about this? So we have the 0.786 retracement lining up beautifully with this line right here. You said like 410,
Yeah.
right? Yeah, that the 0.786 sits around 412, right? So I mean, like if price starts to really push its head above this, I would question the validity of us being in an impulse to the downside, and I would
Yeah.
reanalyze the macro outlook. But at the moment, that's not
Yeah,
the
at
case.
the moment we remain in that bearish ideology.
Right. And it's been profitable the entire year to more or less short these pops. Now they can go on for multi days. We actually saw this one. I would not include this one as similar to the ones that we were in, right? Because we're looking at A, B, C. So this was actually the largest correction we'll probably see. Assuming that our analysis is right. But yeah, I mean, we can still pump pretty hard in the short term. It just depends. I'm sure some fundamental catalysts will influence that. Regardless, we are seeing a pretty gnarly candle here close today. This does
Yeah.
not look good for the buyers by any means. This looks kind of bearish. So we'll see where that leads us. I actually like if we go to the 2 hour. I don't know why the 2 hour has been just like a nice pleasant chart for me to look at recently. Logan, remember how I've been saying the 30-day has been like
Yeah.
huge?
Yeah.
What do you think about a retest of this?
And then move higher.
And move wherever.
Yeah.
Could move up, could move higher. I don't know. I like a retest. It seems like we overshot a little bit,
Right.
a little bit. But maybe I'm wrong. Maybe the overshot is F409 and then we come down. Who knows?
I have a
And then
question.
there's also a very real thing about like the Santa rally as we head into
Oh, dude,
the what's up?
you read my mind. Keep going.
Yes, I mean like as we head into these fall months, how is the market going to perform? So when we look at a seasonality chart, I don't have one right next to me at the moment, or when I look them up, they're usually shit anyway, so I don't even want to look one up. But seasonality usually suggests that around Christmas, Thanksgiving, in that area, Black Friday, we usually have a little bit of a run up in stocks. Now that's I would say that's a little bit of an obscure data point because those data points are also taken from raging bull markets and stuff, right? So what I would be looking at is what is the seasonality of Q4 look like in a bear market? I would love to see that chart. I don't know if anybody has that.
I'm pulling up 2008 right now.
Well, right. Yes, I know 2008's worked, and I know it's been a viable analog so far, but
Pretty much went sideways.
right,
Pretty much.
right. Um, I want to see what it looked like in 2000. Well, I don't even know. I don't want to start getting down this rabbit hole comparing these, to huge financial crashes. But yeah, we'll see what happens. Typically, it's normal for markets to rally during that time, so we'll potentially see if it carries on. But this rally is already pretty significant. So if we're gonna go up, if we're gonna continue this pace, this trajectory, right, this angle that we're at, like we'll be back above 413, 412 by the end of November if we continue this trajectory, which I don't know if that's yeah, all right. I don't know if that's likely. So maybe we'll see a little bit of a stall here soon, perhaps some chop. This market can be pretty nasty, especially right here. When's our next FOMC? Do we know?
November 2nd.
Oh, jeez, that's very soon. That's extremely soon.
Just confirming that really fast. I'm pretty sure. Yeah, November 2nd.
Yeah, so it wouldn't surprise me to see sideways price action until that FOMC meeting. Because guys, what is that? Is that next week?
Yeah.
Wait, yeah, that's okay.
Next Wednesday.
There you go.